Welcome to the world of Trading in the Zone, a seminal work by trading psychologist Mark Douglas. This book offers a unique perspective on the mental aspects of trading, emphasizing the importance of mindset, discipline, and emotional control in achieving consistent success in the markets. Stay tuned as we delve into the key concepts of this groundbreaking book that could revolutionize your trading game. Mark Douglas begins by shining a spotlight on the crux of trading: probability. In the world of trading, probability is a concept that is as vital as it is misunderstood. It's not about the outcome of a single trade, but the cumulative results of many. It's not about winning or losing on one gamble, but how the scales tip over time. Douglas emphasizes that trading is a game of probabilities. You can't predict the outcome of a single trade with absolute certainty. The markets, after all, are a complex interplay of countless variables. But what you can do is tilt the odds in your favor. How? By focusing on strategies that have a positive expectancy, by not putting all your eggs in one basket, but spreading them across many. By understanding that losses are part of the game, and that the key to winning is not avoiding losses but managing them effectively. Successful traders don't obsess over individual trades. They don't let a lost trade shake their confidence or a one trade inflate their ego. They understand that each trade is just one of many, a single drop in the vast ocean of market opportunities. They approach trading with a probabilistic mindset. They know that their strategy won't win every time, but if it has a positive expectancy, it will win over time. They don't try to predict the market, they react to it. They don't aim for perfection, they aim for consistency. They don't fear losses, they manage them. This probabilistic approach to trading is liberating. It frees traders from the emotional roller coaster of wins and losses. It instills in them a sense of calm and confidence, a steady hand in the unpredictable world of trading. But it's not easy. It requires discipline, patience, and a solid understanding of your trading strategy. It requires you to detach yourself from individual outcomes and focus on the bigger picture. Embracing the probabilistic nature of trading is the first step towards consistent trading success. It's a journey of self-discovery, a quest for mastery over the markets, and more importantly, over oneself. Discipline, it's a word we all know but often forget when it comes to trading. Imagine a world-class athlete. They train daily, follow a strict diet, and never skip their routine, no matter how they feel. Their discipline is what sets them apart from the rest. The same principle applies to trading. Discipline in trading is about sticking to a well-defined trading plan. This plan should outline your trading strategy, risk management rules, and specific criteria for entering and exiting trades. It's like a roadmap guiding you through the chaotic world of the financial markets. But having a plan is one thing, sticking to it is another. It's easy to deviate when faced with market volatility, or when a trade doesn't go as planned. It's tempting to make impulsive decisions based on emotions rather than your trading plan. But remember, discipline means following your plan, especially when it's hard. Risk management is another crucial aspect of discipline in trading. It's about knowing how much you're willing to lose on a trade and sticking to that limit. It's about understanding that not every trade will be a winner, and that's okay. Effective risk management helps you stay in the game and bounce back from losses. Discipline also means sticking to your predetermined rules and guidelines. These might include setting stop losses, taking profits at set levels, or avoiding overtrading. These rules help maintain a level of control and prevent reckless decision-making. It's worth noting that discipline isn't about perfection. Even the most disciplined traders make mistakes, but they learn from these mistakes and use them to improve their trading strategy and decision-making process. Being disciplined doesn't mean you'll never face challenges. On the contrary, trading will test your discipline regularly. But each challenge is an opportunity to strengthen your discipline and become a better trader. In the end, discipline isn't just about following rules or sticking to a plan. It's about consistency, resilience, and continuous improvement. Discipline isn't just a trait, it's the foundation of successful trading. Discipline isn't just a trait, it's the foundation of successful trading. Emotions, they can drive us to the heights of joy or into the depths of despair, especially when trading. Emotions are a natural part of the human experience. They can fuel our motivation, guide our decisions, and even shape our perceptions. However, when it comes to trading, emotions can often be a double-edged sword. You see, the markets don't care about your feelings. They move based on a myriad of factors, many of which are beyond our control. This unpredictability can trigger a whirlwind of emotions, from the exhilarating high of a winning trade to the gut-wrenching low of a losing one. So how do you navigate this emotional roller coaster? Well, the first step is to recognize that emotions are a part of the game. Fear, joy, disappointment, excitement, they're all part of the trading experience. But while you can't control your emotions, you can control how you react to them. This is where emotional intelligence comes into play. Emotional intelligence is the ability to identify, understand, and manage your emotions. It's about being aware of how you're feeling and why you're feeling that way. It's about being able to step back, take a deep breath, and evaluate your emotional state without getting swept away by it. But it's not just about managing your own emotions. It's also about understanding the emotions of other traders. Remember, the markets are driven by the collective emotions of all the traders participating in them. So, by understanding the emotional state of the market, you can gain valuable insights into potential market moves. Now, mastering your emotions doesn't mean becoming emotionless, quite the contrary. It's about harnessing your emotions, using them as a tool rather than letting them control you. It's about learning to stay calm and focused, even in the face of market volatility. And most importantly, it's about maintaining your emotional equilibrium, keeping your highs and lows in check so that you can make clear, rational decisions. Mastering your emotions isn't about suppressing them. It's about understanding and managing them. Mindset. It's the invisible force that shapes our trading decisions, often without us even realizing it. In Trading in the Zone, Mark Douglas delves deep into the role of mindset in trading success, focusing on three key elements: confidence, resilience, and a focus on abundance. Confidence is the cornerstone of a winning mindset. It's the belief in oneself and one's trading strategy that enables a trader to take calculated risks, face uncertainties, and stand firm in the face of market volatility. It's not about never failing, but about trusting that you can handle whatever the market throws your way. Resilience, on the other hand, is what keeps us going when things get tough. It's about bouncing back from losses, learning from mistakes, and persisting in the face of adversity. Resilience in trading isn't just about survival. It's about thriving, growing, and evolving, no matter what comes your way. And finally, we have a focus on abundance. This is about shifting your mindset from scarcity to abundance, from fear of losing to the joy of potential gain. It's about seeing every trade as an opportunity, every challenge as a chance to learn, and every setback as a stepping stone towards greater success. But how can we cultivate these qualities? Douglas suggests that it starts with self-awareness. By understanding our fears, biases, and emotional triggers, we can start to reshape our mindset and transform our trading performance. He also emphasizes the importance of discipline and consistency, reminding us that a winning mindset isn't something that happens overnight, but rather, it's a habit that we build and cultivate over time. Remember, trading is as much a mental game as it is a financial one. The markets may be unpredictable, but with a winning mindset, we can navigate them with confidence, resilience, and an abundance-focused perspective. A winning mindset is the key to unlocking your full trading potential. So, does trading in the zone still hold its ground in today's dynamic trading environment? This question arises quite often, and the answer is a resounding yes. The principles and insights that Mark Douglas shared back in 2000 are as relevant today as they were then. They remain timeless, applicable to traders of all experience levels and in all types of markets. The world of trading is ever evolving, with new technologies, strategies, and market conditions emerging all the time. Yet the core elements of successful trading, the mindset, discipline, emotional control, and understanding of probability, these remain constant. This is where the wisdom of Trading in the Zone shines. Its teachings are not tied to a specific trading strategy or market condition. Instead, they delve into the psychological aspects of trading that influence our decision-making process and, ultimately, our trading results. In today's fast-paced trading world, the emotional rollercoaster can be even more intense, making the psychological insights and tools offered in the book incredibly valuable. Whether you're facing the fear of a potential loss, the greed of wanting more, or the overconfidence that comes with a winning streak, Trading in the Zone provides timeless guidance on maintaining emotional balance and making rational decisions. Trading in the Zone is not just a book, it's a guide to mastering the most critical aspect of successful trading: